So, what does a home loan underwriter do? Hey, everybody, welcome back. Today, we're going to talk about underwriting and specifically your home loan underwriter and what it is exactly that they do. Everybody, welcome back. I'm Aaron Dehart. If you haven't already, please give us a like and a subscribe so we can keep these awesome videos coming out to you for information about the home buying or home refinance process. Our channel is completely transparent. I open up everything behind the hood and show you everything that goes on in the lending world when you're buying a home or you're refinancing. So today we're going to talk about home loan underwriting and what your home underwriter does. Now, one of the biggest analogies I came up with several years ago in my careers is when you're going through the home loan process, whether you're either buying a house or you're refinancing a house, we're on trial. Seriously, that's the best way to explain it. We're on trial, and it's our job to work together to create a case, a nice, clean file that is going to go through underwriting, and we're going to show the judge, the underwriter, through evidence that you're not guilty, you're not going to have any issues repaying this loan. So today we're going to talk about what goes into that underwriting process and specifically what the underwriter does and what they're looking for. So the underwriter is going to look at what I call the three big C's, and that is your cash, your capacity, and then finally the collateral. And we're going to break each one of those down. So let's start with cash. Your cash is your overall financial situation of how much assets you have in the bank. If you're doing a loan that requires a down payment, how much of a down payment is required for that particular loan product? And also, do you have enough money and can we verify those funds to show? So for example, if you're a first-time home buyer, you've never owned a home or had any home ownership interest in the last 3 years, that's the definition of a first-time home buyer, and you're doing a conventional loan, you can get away with this putting as little as 3% down. Now, we have to be able to verify and show where those funds came from. So they can either be in your checking account, your savings account, it can be taken from your 401k, investment funds, gift funds from a relative, things of that nature. We have to be able to show the underwriter, we have to be able to show the judge that you have that money for the down payment and also any closing cost. So they're going to go in and review your financial documents. They're going to make sure that you have the available funds for closing that include both your down payment and also your closing cost. Now, a couple of things they're going to be looking for in there is one, is there any undisclosed debt that shows that it's coming out on a regular basis, i.e., is there a child support payment coming out that you haven't disclosed that we need to know about? We have to count that against you as a debt that goes out. Next, they're going to be reviewing your credit. They're not going to just be looking at your overall credit score, but they want to make sure that your monthly debts that are being reported on your credit report are matching up with what is in your file that we presented to them. Those also impact what's called your debt to income ratio. And they're also going to be reviewing any late payments. Now, if you had a late payment, more than 24 months ago, it's not that big of a deal. We still have to address it, and we're going to have to do a letter of explanation on what happened. But typically, they're going to be looking at the last 12 to 24 months of your financial picture a lot more closer than they are to things that might have happened a few years ago when it comes to regards to your credit. So they're going to be reviewing your credit score, your overall debt structure. Do you have any late payments? If so, what happened? We need to explain them. And also if there's any undisclosed debt that's coming up that doesn't necessarily show up on your loan application. Next, we're going to be looking at what is called your capacity. And your capacity goes into quite a few different things. One, it's your overall income. Do you have enough income to not only meet your proposed monthly mortgage payment, but also your proposed other monthly debts that we have to include against you? They're also going to be looking at your job stability. Have you been working pretty stable for the last 12 to 24 months is the biggest picture. You don't necessarily have to have the same job. You can have a couple of jobs in the last couple of years, but they want to make sure that there's no excessive gaps and that income has either remained the same or that it has increased fairly steadily with that. They're also going to be looking at your overall debt to income ratio, making sure that it fits within the boundaries and the guidelines of that particular loan program. Now, during this time, they're also going to be getting third-party reviews of things. So even though we have your paychecks, your tax returns, and your W-2s that we use to calculate your income, we still have to get those verified by a third party. That third party is what's called a verification of employment, and it's typically done through your HR department, where they're actually going to fill out a form and break out your income for us. So it's very important when you're going through the application process that you are 110% transparent that, hey, I make $8,000 a month, but 3,000 of that is an overtime. That's fine. That's great. However, if you have not been receiving that overtime for at least 2 years pretty consistently, we can't use it. So it's important to make sure that we're breaking those things out, and that's why we have to get the verification of employment. Now, next, they're going to be looking at the final C, which is called the collateral, and that's the actual property that you are purchasing or that you're doing a refinance on. And they want to make sure that that house is worth what it's really worth. There's no structural problems. It's structurally sound. The last thing we want to do is close a home loan for you, and whenever it rains, you're having to move a bucket around to collect the rain. So they want to make sure that the house is worth what it's really worth and that it is safe and livable for you as well to live in. Now, let's go through and talk about some of the other things that they're going to do. Once we get the appraisal on the house, and the appraisal is done by an independent third party, they do not work for the lender. A lot of people get that confused and they think that it's our appraisal. They're not. They're an independent third party that goes out. They're completely separate from the transaction, and their job is to come up with a reasonable value of what the home is actually worth. Is this home worth what you are buying it for? Is the basic guidelines with that. They're also going to ensure that the loan is structured properly and it meets all the proper criteria for that particular loan program. Certain loan programs have max debt to income ratios that we can't exceed. Other ones are more lenient. Other loans are more strict with certain credit requirements, while other loans are not. So we want to make sure that we're structuring and putting you in the proper loan program so when we get to underwriting, it does meet all of those decisions. Now, typically, you're going to go to underwriting 2 times. That's very normal. The first time is going to be what's called your initial underwriting loan approval. And what that means is we're going before the judge, we're presenting our case, we're presenting all of our evidence with your pay stubs, your W-2s, your bank statements, etc. Any letters of explanation that might be needed to get that loan approval. And if everything looks good and it fits all those parameters, they're going to issue what's called an initial home loan approval. That means, hey, everything looks great, your home loan is approved, and we're going to give the stamp of approval. However, a lot of times we might need some updated documents. There might be a pay stub that's expired, or we might need an updated bank statement, or we might have to have an updated bank statement that shows the transfer of funds from another account, or we need to get a gift letter from family members that are helping you out with the closing cost or down payment. All those things are totally normal. It's totally common. Don't get freaked out and alarmed when it's like, hey, your loan's approved, but we still need A, B, and C. Totally normal, and it's all part of the process. A lot of times, we're still waiting for third-party things as well. We can get your initial loan approval done, but we might not have the appraisal back, or we still might be waiting on a certain inspection, or we're waiting for some funds to be liquidated that we can use, etc., etc. All that's totally normal. Now, once we get all of those conditions back, and we're going back before the underwriter, they're going to review all of that stuff again and make sure that everything that they've asked for is exactly what they've asked for and how. So we got to cross all the T's, dot all the I's. Now, once they've issued that decision, they're going to issue what's called your final loan approval or clear to close. And that means every single condition's been satisfied. The appraisal looks great. Everything's fantastic with that. And we're going to go ahead and finalize your loan approval and issue what's called your clear to close, meaning we don't need anything else from you. We don't need anything else from a third party, and everything looks good. Now, they're going to give a few different types of decisions, okay? The first one is our loan approval, okay? So like we were talking about, you're going to get your initial loan approval and then your final loan approval. And again, your initial loan approval is typically what's called approved with conditions. Now, every once in a while, we might have a file that it gets what's called suspended. And it's not a denial. It just means that, hey, I don't have enough information. I need a little bit more information, a little bit more evidence per se, to issue a loan approval. And that does happen sometimes. Don't get alarmed. All it means is, hey, we're just one step closer to a loan approval. We just need a little bit more information and a little bit more documentation in order for us to get you to the finish line. And then finally, the worst one is going to be what's called a loan denial. Now, I'm going to tell you right now, if you've got a good lender, there's no reason you should even get that far. What we do, if we have kind of a file that has a lot of hair on it or it meets guidelines, but there might be some quirky things, we're actually going to do what's called a TBD underwrite, meaning we're going to get your full package together before you even go looking out at a house and actually present it to an underwriter up front so they can issue that loan approval minus a purchase contract, minus an appraisal, and minus what's called a preliminary report. A preliminary report comes from the title company, and that's basically just a legal description of the property. And that's required on every single loan, whether it's a purchase or a refinance. So in a nutshell, the underwriter is the judge, and they're the final set of eyes that are going to decide if your loan is getting approved or not. So any good lender, guys, I'm going to tell you right now, is going to have a good checklist up front of whatever the underwriter is going to need. And it's very important that you don't argue, you go with the flow. Remember, you're on trial. At the end of the day, you're borrowing hundreds and hundreds of thousands of dollars, and we have to make sure all the T's are crossed and all the I's are dotted so we can get you to the finish line and have a nice clean loan approval for you and a nice stress-free as possible loan closing for you. Everybody, thanks for watching. Again, give us a like and a subscribe, please, and we'll see you soon. Have a wonderful day.